Good afternoon, everybody. I think we're ready to get started. And hey, first of all, thanks for joining and welcome to Greenwich Associates Market Structure Update. Today we'll be continuing our coverage of the alternative data space. And more specifically, we're going to look beyond the definition and categorization of alternative data and get more into effectively putting that data into use. So I'm Dan Connell, Managing Director here at Greenwich Associates, and I'm responsible for the market structure and technology practice. And I'll be the host today. I'm going to be joined by a great panel. That panel is going to be moderated by Kevin McPartland, who's our head of research within the market structure and technology practice. He's going to be joined by Paul Lasmet, who is the practice lead and advisor for financial services at Arcadia Data. Adam Sussman, head of market structure and liquidity partnerships at LiquidNet. And Bob Biotti, senior director, global alliances and partnerships at Dun & Bradstreet. Great panel. I'm sure it's going to be very interesting. Before we jump right in, just a couple of housekeeping items. If you're hearing an echo and your ears are ringing, please check the audio settings. Make sure that telephone is selected so you're not getting duplicate audio feeds coming through. Throughout the presentation, questions are welcome. Please feel free to type them in the dialog box. We'll try to answer as many as we can during the webinar or certainly at the end when time allows for Q&A. If we don't get to them, we'll absolutely come back to you post the webinar and interact then. If you have additional questions after the webinar, we're going to give you the contact details for the participants. Please feel free to reach out directly. And I think we also have a few polling questions in the webinar today, so please feel free to provide input when they come up on screen. And then finally, as always, we encourage you to fill out the survey following the event. Always looking to improve, and we certainly want to make sure we cover those areas in our future webinars that are of most interest to you, our clients, and friends in the industry. So before I turn it over to Kevin in the panel, let me take a minute just to plug Greenwich Associates and the market structure practice in particular. In the market structure practice, we here are focused on everything that changes in the ecosystem of institutional financial services, whether that be technical changes, regulatory changes, macroeconomic, political changes, and then how they may impact the market participants and those folks that glue the buy and sell side together. We think our differentiator in here is that we conduct a tremendous amount of research with the market participants in general, and this year we're going to ask about 3.5 million questions to 65,000 market participants that forms the basis of the data that then informs our analysis and opinion. So we think we've got a great perspective, and it's based on data and current data from the market. So with that marketing blurb out of the way, let's push forward into the end of the presentation today. Okay. First is talking about alternative data. We are awash in data every day. You see some of the components here on the slide. Every day we're creating 2.5 quintillion bytes of data. So for those folks that aren't familiar with quintillion, add 18 zeros to that 2.5 and you'll get to a quintillion. And if you start stacking up those Blu-ray discs and get to 4 Eiffel Towers full, think of how much data that is that we create. And then some specific examples from there. Think of Walmart. You know, Walmart's processing 1 million customer transactions every hour, right? The GDEL project, which takes in literally every piece of media from around the world, whether that be in print, in radio, whether that be social, and makes that available in near time and does that for free. Tremendous amount of information that's in there. You look at Facebook, they're uploading over 400 million photos every day, right? You know, Twitter, I have here Twitter versus the New York Times. Twitter today is going to post more words than the New York Times has printed in the last 50 years. Let's think about that for a sec. And what that means is there's a tremendous business out there, and you'll see that there are projections that this is going to grow 5-fold over the coming year. It's a big business today. It's going to be a much bigger business as we go forward, and we think it's going to be a very important stool in the investment, and very important leg on the investment decision-making stool as we go forward. So we tried to make a very basic view here of the alternative data ecosystem and who are the market participants there. So we see a tremendous amount of data originators, and these are everyone from, you may have seen traditional data originators, think Twitter, think satellite feeds, those type of things. But it really has turned into and morphed into anybody that has an exhaust from their day-to-day operations. And then we've got another component of that ecosystem who are the providers of the big data platforms, those folks that can take the data in, normalize it, and make it applicable and useful for market participants. And then once that happens, you need the subject matter experts, those folks that not only can identify the alternative data sources, but understand what it means and how it can impact an investment decision. And then it gets all the way around to the beneficiaries, whether that be the asset managers, all the way down to individual investors like all of us on the phone here today. And then we tried to put together a bit of an ecosystem view. The intent here isn't to be exhaustive because, quite honestly, I cut this down by probably 80% to get the names on this slide. The intent here was really just to show where we think some of those categories are in the alternative data ecosystem, and to show some of the names that are out here, some that you know, right? So you see Arcadia's in there, but Bloomberg and FactSet and TR and others. Dun & Bradstreet's on here, but you see also others that you maybe have never heard of, and these are all very active names in the alternative data space. Right. So let's turn that over to our first poll question. Right. And I think our first poll question is going to ask for the participants here, where do you think you sit in that alternative data ecosystem?
Great.
Right. And with that, let me turn it over to Kevin as well.
Perfect. Thank you, Dan. Thanks for getting us started. And I think what we'll do is while the audience is responding to that poll question, let's ask our panelists the same question. Bob, maybe we'll start with you. Tell us where you are at Dun & Bradstreet. Tell us where you fit in this ecosystem and how that's evolved over time.
Hi, Kevin and audience. Thanks. Well, we are clearly a source of this data, what you'd call here a data originator, and we provide data and business intelligence on both public and private companies, and have unique transaction data. We also have proprietary scores that are developed by our analytics team, most of which focus on the value of trade credit transactions, payment behaviors of public and private companies, information about business relationships, businesses' supply chain. That information we found, especially in the evolution here of alternative data, has become valuable to the buy side's ability to provide predictive signals within their algorithms. So that's kind of how the data is used today.
Fantastic. Thanks, Bob. And Adam, from LiquidNet's perspective, where do you sit in this ecosystem?
Yeah, thanks, Kevin. Yeah, LiquidNet, being a broker-dealer and having a front-end interface that services, some 800 buy-side firms globally, would sit somewhere between, a beneficiary and a big data provider. We acquired a company earlier this year called OTAS, which had worked extensively with London-based trading desks to be able to transform data, a combination of market data, fundamental data, and alternative data, into actionable insights, and then integrate those insights seamlessly into the trader's workflow. So via that acquisition, we've acquired the ability to ingest all kinds of data, including alternative data, and then process it in such a way to make it relevant for our customers.
And your customers then are the sort of true beneficiaries there of that data.
Yeah, hopefully they pay us for it, so we benefit too. But yeah.
Well said. Last but not least, Paul, where is Arcadia in this puzzle?
Hey, thank you, Kevin, and really happy to be part of this panel discussion with everybody here. Arcadia Data, we are on the technology side, but we do the data visualization. So what we do is we enable the end users, the beneficiaries, the subject matter experts, to be able to visualize, to be able to see the data that they put together, and to really get the value out of it in all its granular glory.
Excellent. That's great. And so we have up here the results of the poll. Just like our panel, glad to see our audience is a pretty good mix of this ecosystem as well. So the majority, just barely the majority beneficiaries, but a good number of originators, big data analytics platforms, and subject matter experts, which is fantastic. So with that, so for the next part of the conversation, Paul's going to take us through a good sort of visual use case to help get a feel. When we talk about these things, they always feel a bit sort of fluffy and in the clouds, no pun intended. So to really understand how this could be used in practice, we think would be helpful for the audience. So with that, I'm going to hand it over to Paul, who's step us through a real world use case.
Okay, thank you very much. So we're going to give some examples, and really the purpose of this is really to get the juices flowing, get everybody to think about what alternative data is, what they're using it for, and really to get the conversation going later on in this presentation. So here I'm going to look at an example of enriching conventional with alternative data. So it's really about looking at your conventional portfolio analysis. In this example, it could be looking at retail stores or something like that. And we look at the standard performance chart. You look at performance heat maps. What's the trading volume? That's all conventional. But what we're looking at here now is to say, okay, how can you enrich that? And you enrich that with alternative data sets. That's the story here. So looking again at retail stores, one of it is looking at sentiment analysis. A lot of it, some of it could be looking at this idea of location intelligence, where you're taking different types of data points or data assets and tying them together to a location, and then you're able to, from that, really be able to see apples to apples when you're going from location to location to location, and that's pretty important, I think. Looking at another one is going past the fundamentals. So in this case, I just made up this scenario, and I worked with Bob a little bit looking at the sort of data that Dun & Bradstreet has, and I came up with a scenario, right? So I'm thinking, okay, portfolio manager, they have I'll call it a bucket of opportunities to review, what are companies that they may want to invest in. And from that, of course, you have your fundamental due diligence is performed, that sort of thing. So right here, that's your standard bar charts and line charts and things like that. But the question after that is, what else can inform the decision making? So one of it is, how healthy is the company? You can start looking at commercial credit scores, financial stress. What's the health of the suppliers? Are there any dependencies that the suppliers, aren't able to deliver, and then the product that this company is very good at, starts to fall behind? And another one is, looking at, are other investors interested in this, in these companies? Are you first to the table? Are a lot of people looking at it? And so I just came up with this network chart that shows that. And this is all the type of stuff that Dun & Bradstreet has. And taking another look, let's give us a few more examples of how you might be able to visualize this. Again, these are just ideas, just to get the ideas going. So looking at the idea of the company health that we talked about a little bit earlier. Looking at the company relationships, the parent, subsidiary linkages, who are the beneficial owners, what's the percentage of it, that sort of thing. And going back to this other idea from the investor interest, what legal entities also made inquiries into those companies, where are they located? And I think what's interesting is this last piece, I was just looking at some of the capabilities that Dun & Bradstreet has, and I just came up with this on my own. I looked at it and said, hey, this would be interesting. This might provide additional insight. So it just shows the idea of being able to explore and come up with your own insights based on the data that's being presented to you.
Hey, can I ask you
It's Bob. Oh,
Go ahead, Bob.
Okay. Oh, actually, I was going to pick up on your point, Paul, and say that I think the last point you made is one of the more interesting factors that we found, that the data that we provide both that's live and active and in trials, what we found is it's quite interesting that once you put the data in the hands of the real smart quants that work for the hedge funds and some of the other portfolio managers, it's exciting to see how they come up with their own ideas, as you just articulated, that maybe we or nobody else has ever thought of. And I think that's the value here when you look at what the meaning of alternative data is, regardless of what kind of alternative data it is. Every end user has their own value for it based on their strategy, based on the kind of algorithms they deploy, based on how smart they are or not, whatever their experience might be. And I think that is the eye-opener for us here. And I think you just articulated it, so you probably see it too. I might be interested in hearing what, from Adam's point of view, is do you see the same kind of things, Adam, from your end users about a creative aspect to this?
Yeah, no, that's a great question. And the way that the kind of use cases that we've found and the applications for alternative data, the way that I would kind of split it out is between the single stock folks out there and versus programmatic trading, and then also thinking about it along the lines of discretionary, meaning that there's a human deeply involved in the investment process versus systematic, and the type of data as well as how the data gets fed into those processes varies widely between those kind of four different ways of investing. So from our standpoint, the kinds of folks that we're closest to are the traders, and nowadays the traders are acting more and more as kind of like substitutes for what the traditional sales trader used to do. So as we all know, the cutbacks among the bulge brackets and the decline of the number of folks manning these desks, and so the buy-side trader has become the person that the portfolio manager looks to for what's happening in the marketplace. So that's the kind of data, and the way that they use that data is probably less about the investment process, because the PM has already gone through that process. It's more like right now what's happening in the market that I might need to know in order to adjust the kind of size that I want to get done, or the urgency of completing the order. And that's where it gets back to, I'm not asking this to, but if we flip back to, that smorgasbord of data providers out there, it would be more along the lines of, real-time alternative data, maybe whether that's, sentiment analysis, or the near-time media content from GDEL, things like that. And the process that that OTAS uses is to say, look, we're gonna look for abnormal changes in the actual behavior of the stock. That's the first thing to look at, right? And then the alternative data is explanatory, right? So then we try to say, okay, there's something happening in a stock, you need to pay attention. Now let's help you find the explanation for why that's happening. So it's a slightly different use case for what we're going through here, but I think it makes sense that on the trading desk you're going to be looking for more real-time data. When you're going up to the portfolio management level, you're probably looking at longer time horizons when it comes to the kind of data that you're looking at.
And Adam, are you finding that?
Go ahead. Well,
No, sorry, it's Kevin. I was just going to say, and Bob, this could be to you as well, but are you finding that the traders are quickly getting the joke and seeing the value, or does it feel like there's been a steep learning curve for a group of folks that maybe has been doing what they do sort of the same way for a long time?
You know what? I mean, go ahead, Bob.
Oh, did you ask? Sorry, Kevin, did you ask me or Adam?
Both of you. Adam, why don't you go first, and then Bob chime in.
Yeah.
All right. So yeah, I mean, I think that look, the buy side is a very heterogeneous population, right? You got all sorts of different kinds of personalities and workflows, so it's hard to paint them with a broad brushstroke. But I would say that everybody has looked at things like the social velocity index, and for some people it's been relevant, and for other people it's become noise. So I don't know if it's so much about getting the joke or not, as to whether it's more about how much does it really help them execute on the objectives of their portfolio manager. If you're a buy and hold shop and you're holding names for 5-10 years, I mean, it's just not going to be that impactful, right? And the portfolio manager may not care that Trump just tweeted something, just be annoyed by knowing that. So at other shops where they might still be long only, but they're trading around positions, right? So they're going to hold a stock for a long period of time, but they might trade around it and size up and size down depending on market conditions. That's where you start to get into workflows where this kind of data becomes relevant and really helps them add performance to the portfolio. Then when you move to an even more a higher turnover shop like a hedge fund, where the trader actually has some discretion over the size of the position, then now you get to the real cutting edge type folks.
And from Dun & Bradstreet's perspective, I think we indicated more from with the quants and the data, the big data analysts at these shops. So they undoubtedly get the joke. They are so immersed in this that once you get them to understand that all big data is not equal, all alternative data is not equal, and social media data is different from geolocation data, and that the data that we provide, which is on business performance, payment behaviors, things like that, very quickly the eyes open, oh yeah, that could be something I never considered. Because honestly, when you look at the Twitters and the Squarespaces, that's almost old. Everybody knows that has some use. Some people don't actually think that there's other financial data, business performance data. Once you present that, it's very quickly absorbed, and then the quants will want to dig deep into it and try to understand where some of the correlations are. And we've done a lot of that ourselves, but they come up with their own often, and then or ask us in an iterative process to make some adjustments. Hey, can you do this? Hey, what if I do this? Can you do that? So yeah, because I think we're dealing with the quants, they're all over it. And I think that lastly, I think to tee you up again, Paul, I think the kind of tools that Arcadia provides really are the way that they want to look at things. When some of the charts and graphs that you show here just on these couple of slides, that's the way that this audience is accustomed to viewing it, and when doing it, you bring out some opportunities that they may not have seen before.
Okay, yeah, thanks for that. One more slide, and we see some questions talking about providing access to natural language processing and so forth. Suresh, we see your question. It's a great question. That goes to my next slide, talking about how would this all work, right? And so we have these are data sources. It could be logistics, private company data, supplier data, satellite data, Twitter feeds, things like that. And a lot of it is looked at putting into a data lake. And what's a data lake? It's a repository where you put data in its native format, right? So pre-processing it and so forth. Data lake is a lot more. There's a lot more to it, but I'll just leave it at that. And traditionally, what you have is you have these layers on top of it. So you have extracting into the data warehouse, putting into these cubes, putting it into a data visualization server, so that people then can get access to it. To make all this work, what we suggest is that you're going from this layered architecture, so the conventional, traditional way of looking at it, and going directly to where the data resides. So I'm taking that same story, got all these data sources, and they're going into that data lake. The difference here is that you're able to do your visual analytics, you'll be able to see that data. What Bob was just referring to is you're actually going directly to that data, you're inside it, and you're getting direct access to it to do the visual analytics on it. And it's from that you're able to have the web-based interface and build out these customized applications and so forth directly on that data. And just to give you a little background, all these demos that you see are things that I did on my own, just by exploring, looking at the data, trying to figure out what the story would be. And I didn't have a data scientist or quant working on it. It was really the ability just to be able to explore it, and I'm not a programmer myself. So that gives you a little quick. Oh, to answer the question of Suresh, so when he was talking about, he's asking, how does Arcadia Data provide natural language processing capabilities before the visualizations, and also about looking at streams. So going back to this, the natural language processing and so forth, all that is being done at the data lake level, or you could see it as a source of data. So you have some machine learning algorithms, things like that are going through and trying to figure out, okay, what is the sentiment? What are people thinking about certain brands? That is, to me, a data source, and that we're able to access it, and then you're able to make some sense out of it and join it with other things. So we are not a natural language processing in that sense. We are able to take that data, unstructured data, real-time data, historical data, and be able to allow the end user, the subject matter expert, to really be able to see it and look at it.
That's great, Paul. Those are great visuals. And so, we're going to get into a little bit of data here from the results of a study that we published not too long ago, trying to understand what data people are actively using today. One of the findings from here was that social media data, which often when we ask people about alternative data is the first thing that they think of, is pretty common at this point, both for asset managers and hedge funds, so much so that it's feeling a little less alternative and more sort of a normal course of business. You can see sort of down the list, these are some great other examples of where alternative data, or what types of alternative data is being used. Logistics data is big, business performance about private companies, right, which Bob talked quite a bit about. And then some of the other things we've heard about, geolocation, satellite imagery. A particularly interesting one seems to be Internet of Things, and that's another term that means a whole lot. But think about every single internet-connected device in your life, and you have many of them, probably more than you realize, right? Everything from your phone to quite possibly your car. I know my oven has a Wi-Fi connection, right? So it's really going on and on and on. And but I think the trick here, and this is really was illustrated very well through Paul's demo, is finding that data or realizing it exists is it's non-trivial. However, the real tricky part is taking that data and knowing exactly what to do with it. Which was another interesting point, and another question that comes up quite a bit is sort of what comes first, the data or the strategy? Do you have a portfolio manager with a strategy who looks to find data to support that idea, or do you have a portfolio manager out looking for data that will potentially create a new investing strategy? There's no single answer to that question. If we sort of look at a high level, it tends to be asset managers, sort of those sort of real money investors who have a strategy and look for data to help enhance that strategy or support that strategy, whereas the hedge funds, if anyone, are more likely to just start digging around through data, looking for something interesting, looking for a new correlation. And again, I think that's where the visualization largely comes into play.
Yeah, and I think that's kind of like, that's what I was, referring to earlier, right? I feel like I could take these categories and they would pretty much line up with, whether the asset manager or hedge fund was single stock or, program-based and or discretionary versus quantitative, right? So, you're like, I don't think that you're going to find a single stock firm that's going to say new types of data inspire new strategy ideas, right? You know, they're already going through a process to try to, you know, pick a stock. That's not going to change. But the data that they use could better inform, you know, the outcome, for example.
Are you finding, Adam, yet that you're having customers call and point out, hey, you know, I did something that I wouldn't have done without this, or do you think it's a little still too early days for that?
I think anecdotally, yes, we do hear that, and it's usually so far, and this is probably as indicative of where we are in our life cycle of integrating OTAS into our front-end system as anything else, is that it has more to do with when, you know, showing any data in the right context as opposed to, you know, the data itself, right? So it could be that someone told us that, you know, hey, I found something really interesting via, you know, the feed from Insider Score or from Estimize or Wall Street Horizons, or we're just, you know, a few of the data providers that we have feeding into the system. But it has more to do with where they were in the process and how we alerted them to the change in the data than it was like the data itself, if that makes any sense. So that's why, you know, I think that how this data gets integrated into the process and how, if there's a human involved, you know, what kind of context they're shown around the change in the data is as important as, you know, the other issues that we've discussed.
Sure. And just a reminder to the audience, if you do have questions, please feel free to submit them through the GoToWebinar interface. And Bob, I was going to take it over to you. I mean, are you often, I suspect when clients find ideas based on your data, they want to keep those ideas to themselves. So are you having clients sort of explaining to you how they're using it? And if not, is it then tough to package that up, you know, in a way that you think is useful if in the end your clients aren't telling you how it's useful to them?
Yeah, Kevin, you've probably hit on one of the most challenging things we have to do. So certainly, as we would expect, there are some that share very little to nothing. There are others that will outline, you know, for the purposes of working with us and trying to get us to understand what else we might be able to do with the data to help them. They have to share some of how they're using it, or at least frame a particular use case or scenario that would help them, but doesn't necessarily tell us how they use it, but they will frame some scenarios for us that help us understand what they're looking for and if we could manipulate our data to provide what they're looking for. But it does make it, the nature of the business, and we knew this going in, it does make it very different from other businesses applying data, because we know we're not going to know a whole lot about how think about it, the best clients we have, the ones that are getting the most value, are the ones that are going to provide the least amount of information back to us. That's by definition. So, and that combined with the element of the heterogeneity of that business, and Adam referred to it before, no two are alike. So it's going to depend on how many other data sets they have, what their technology is like, what different strategies they deploy, where they are in their cycle. So just because hedge fund X uses the data very effectively to identify some opportunities, it doesn't mean that other hedge funds will. So not only do we not know precisely how everyone is using the data, but even if we did, that sometimes would challenge us in providing the same value to the next fund. Everything is unique, and it makes it somewhat challenging, but it also is interesting when you begin to recognize the value in many different hedge funds in many different scenarios.
Yeah, well, and then I guess the biggest challenge I'd imagine for you as a firm trying to make some money, right, is then how do you price it, right? If your clients aren't going to necessarily allude to the true value of the asset, right? I suspect that's an issue for a lot of providers in the space, trying to figure out how to value it.
Yeah, it is. I mean, obviously we have our framework for pricing and how we charge for our data sets, but to some extent, you hit on a point in that the value of data is really, could or easily be measured by the value to that particular end user. And since we don't know the specific value or how much they might be making on it or how they're using it, we really have no other way to frame it other than pricing it and packaging it by quantity of data, type of data we have. And I think that works certainly for now. Hopefully over time we'll grow more intelligent about the uses and the market will become more understanding and accepting of that, and we can have more variable pricing strategies. But for now, it's pretty easy on our side, although we're aware that there are unknowns there that could change things over time.
For sure. And so, and finding that value, right, as we pointed out earlier, it's one of the hardest parts even for the end users. You can see here when we ask, how are folks putting that alternative data to use? Data visualization tools are number one and growing. Also, a number of the providers are, sort of packaging up analytics with the data, so not just providing raw data. And you can't help but notice, Excel just won't go away. Not necessarily that we want it to go away, but the power of Excel is interesting. Although, I mean, maybe Paul, put this to you, you have to imagine that as customizable as Excel is, to your point earlier, right, you did what you did without being a programmer, that you're still going to have a hard time, especially as data sets get non-standard and very, very big. Excel's just not going to cut it.
Yeah, and I think, I agree with you, Kevin. I think what that shows is that the use of alternative data to enrich your strategies or how you're going to look at it is very it's very much a self-serve sort of process, right? You need to be able to use your, like Excel, or like Kevin said, Excel, everybody knows how to use it, and they've all come up with their own little ways of having to use it. And they're really doing the exploration on their own. And we also saw that in the report earlier, that it is self-service. They are driving the process. And they're also working, in groups, it's team-based approach also.
Yeah, right. So tools that allow people to collaborate. It's big, right? Because the answer, it's not always so black and white. There's certainly a lot of gray in this kind of analysis. But again, back to the conversation about value. Clearly, the investment community is seeing value. So, and this was sort of one of the headlines out of our research that we put out last month. With 90% of the investors we spoke with that are currently using alternative, they said they're getting their returns, and the vast majority planning to spend more money on this in the future. So, what is the next step here? How do we? In some ways, it's so obvious that there's value here. But not everybody's doing it yet. So sort of what comes next? I don't know, Bob, I mean, it's done in pressure. As you guys think about what else you can do with the data, how do you sort of get it out there more? What are some of the sort of major priorities and things that you're focused on?
I think we're looking at not just the data applications in this way, but also where else does it fit in this industry? Our data, how can our data assist, for instance, M&A, private equity? So there are other factors that we're considering and how to bring out some of the data that we have to make it apply more effectively in this business more broadly. Specifically, when you're looking at evaluation, it's we're talking like in this discussion here is primarily in the equity space, but in the same way that we may be able to look at our private company data and how it applies to, say, private investment or private equity, the same holds true for fixed income, right, or other derivatives. How can we apply our data in that way to learn more about a particular entity and how it's linked in a hierarchy, in a business elements, how more information we can apply, what kind of scores can we create, for instance, to predict business performance in a different way. So we're always looking at that, and we learn from those that are trialing and those that are actively using. We also learn from people like you and people like Arcadia, for instance, that have ways of presenting and displaying our data that bring out some of these opportunities. So it is always tricky, and we know that probably the most interesting part of this is, and you said it, I think, in one of your reports, Kevin, is that, alternative data is only alternative for a short time. It's consistently evolving. So how are we going to do this next year and beyond is something that challenges, I think, all of us, here on this call.
Wasn't that a challenge for you, Bob, as a company, right? You're trying to sell your data to as many people as you can, but then on the other hand, if you sell it to everybody, does it start to then lose value, right? That must be a pretty big challenge.
Yeah, it's a challenge in not just selling it, but in marketing it, because if when you're on a phone call or if you're talking to a hedge fund, you want to say, well, everybody uses this, so you should too. There's an aspect, as you mentioned, an aspect of, well, if everybody's using it, I don't necessarily want to use it. But at the same time, without that kind of validation that others are gaining value from it, you lose some of the potential value in the selling point. So I think everybody in this business has a similar challenge. But I think we know, and I think everybody we're talking with knows. So it's not as if they think nobody's using it. They know that others use it. Maybe you're not telling them. But it is a fine line you have to walk.
Sure. And Adam, your customers, because alternative data, the world is so big, they probably don't even know what to ask for. So how do you guys figure out, what data could be useful to your customer base?
Yeah, I mean, that's one of the subject matter, experts or areas of expertise that we gained through the acquisition with OTAS. They have a very, robust process through which they can take, ingest data and then see, see if there's any alpha in there, see what type of alpha it is, see if it, for example, like one way to measure a data set is over a long or a broad list of stocks. If it is, generating alpha signals, then, how much alpha is there when it's looking across, a large set of buy and sell signals. But, for our single stock customers, that doesn't really matter, right? If we're going to show a piece of data to someone that only has 10 names on their blotter, being right 51% of the time isn't good enough. So, again, depending on who we're looking to service and who's consuming the data, the kind of outcomes that we're looking for change. And so, but those, the OTAS folks are the ones that manage that process, and they're, evaluating different data sets and thinking about how we might incorporate it into our front-end trading system, but then also for, the OTAS, or, the kind of original OTAS consumers that might not be using it only for trading purposes, but might also be using it for the investment process as well.
Yeah, and I just want to add to that, because going back to, it's only alternative for a certain amount of time, it's really about how well it's used, right? Because everybody can, it's not really the data set that's going to get you alpha, it's how the portfolio manager has been able to tie it together, analyzed it, looked at it, and how their team is able to put it together. And it's actually the team that generates the alpha. It's not actually the data sets by themselves.
Yeah, and I would go a step further, right? I mean, just to get really specific on our use cases, the way we think about it is that, liquidity without data or liquidity without intelligence, is kind of reckless, right? Because you could be making a big trade at the wrong time if you don't have the right data in front of you. But conversely, data without liquidity is useless, right? So what we're trying to do is bring together, all these data sets that have some import, but then also, show that at a time where someone knows they can take action. There is an ability to execute on that idea, right now.
Adam, I think you bring up an interesting point that there's such a rush and focus on big data, and Dan at the outset of this call laid out how much data and gave all kinds of stats on it. There's always a rush that, and we all know from being in this business, everybody wants more data. The more there is, the more everybody wants. And there is a risk involved, and you just hit it, that more data is not better necessarily unless it's smart, and actually it could be riskier if you're not smart. The more data you have when you're not smart enough, when it's not intelligent, the more risk you have of making that mistake, and that mistake can be compounded many ways over because of the bad data that you have or the bad ways that you're using it. So I think that's something you also have to bring out, and we find that in a lot of our trials, and that our customers and our prospects are asking for long histories of the data. I want more. They want more and more testing and history of it so they can try to prove it out. But there is a risk factor involved too.
Yeah, sure. I mean, if you have to convince your whoever your manager is that you want to spend whatever the price tag is, $10,000 or $1 million on a data set that because you found a correlation that nobody's ever found before, you need to make sure that it's not like the price of butter in Bangladesh compared to the S&P 500, right? That it's actually causation.
Yes.
So we're getting up to the end here. So if the audience does have any questions, now's your time. We have a great sort of engaged audience that's really active in this space, and thank you everybody for filling out those questions when you register. The vast majority of folks involved on the webinar today are in some way, shape, or form actively involved in the space, which is great. And when we asked about what sort of comes to mind when you think alternative data, the list of responses is insightfully long, which really just brings home how big this market is and how it's only going to get bigger. So I mean, really this can be any type of data. Applying it to financial services really only goes back to how creative the end users, the subject matter experts, the quants can be with it. Understanding sort of how the ecosystem works, how it interacts. We've talked about a lot of the dynamics already today. You want to sell as much as you can to make money, but if you sell too much, you're not going to make much money. Understanding some of those complexities are pretty important. This is a new world in many, many ways, right? The data didn't exist before. The tools to utilize it didn't exist before. I'm sure there'll be cases where compliance doesn't even know what to do with the situation, so getting over that is no small thing. And then, of course, this is definitely a case of, first mover advantage is huge, particularly on the investor side. If you have information that nobody else does, which is something obviously that's as old as Wall Street, it most certainly applies here, and there'll be quite a bit more value there. So before we wrap it up and call it, maybe any sort of final big thoughts from any of our panelists, what the audience should think about, and then we'll wrap it from there. I don't know, Paul, Bob, Adam.
No, just this is Paul again, and what we've seen from the research report that we worked with Greenwich on, and everything else I've seen. It's the alternative data is a process, and it's an iterative process, and it's an exploratory process, and I think it's just going to get a lot more interesting as we go forward.
Right. Bob.
Final thoughts. Well, I think, first of all, I think one thing to recognize is when, at a time now when capital markets investing has become so much more efficient, and passive investing is growing, I think you have to look at it as it's becoming more and more difficult. That little sliver of alpha is more of a challenge to reach, and sometimes alternative data can be the difference between alpha and beta for any professional investor. So looking, turning over every rock and trying to understand where the value is, and trying to stay ahead of the curve is really a challenge as more and more money comes in from the fiduciaries. So much more of it's going passive that if you're active in any way, if you're a manager or a hedge fund in that way, you've got to identify the data and, most importantly, find the best ways to use it and apply it to fit the strategies that you have. And whether it's finding data from a provider such as Dun & Bradstreet or getting a platform like Arcadia to be able to bring out some of those opportunities, or apply it to trading through a broker like Liquidnet. I think it's really on everybody's radar now. Everyone's looking to try to identify that particular sliver that's going to take them over the top and achieve alpha as opposed to beta.
Yeah, I think that no matter where you fall in the ecosystem, becoming more familiar with alternative data and the processes that are used to, convert that into, whether it's sentiment or an alerting function, whatever it is, to me that's just like a new form of literacy that everyone in this industry is going to have some level of comfort with. It reminds me of, going back to the, early 90s in electronic trading, and if you didn't know the basics of, how computers worked or, simple jargon around programming, you were going to be left behind. And so I'm not a programmer, I'm not a data scientist, but I think it's incumbent upon anyone in this industry that they become more familiar with data science and its just basic constructs, so that when they're looking at or reading about different types of products or different types of data sets, they can kind of quickly filter out what might be worth investigating versus what might not be as relevant for their own, firms.
Great, thanks. Hey, let me throw two quick questions out to the panel. First one is, again, from the audience. How does the alternative data utility change for fixed income portfolio managers, given that they traffic in securities that are less liquid with lower price transparency?
I mean, it's Kevin. I can jump in. I mean, I think a lot of the same ideas apply, right? If you're thinking about credit, for instance, the factors in the market that could impact the credit of a company are not all that much different than the factors that can impact, the equity in a company. Understanding their supply chain, for instance, or understanding, I don't know, maybe more macro factors, or even if we take it all the way back up to some of the what have now become the obvious answers of taking pictures of parking lots to understand, if sales are up or down for big retail chains. And in some ways, the opacity of pricing in some fixed income market makes it even more ripe for alternative data, because the answers are even less obvious. So everybody's out trying to figure out how they can, better understand valuations or predict the direction of the market, because the market is harder to track and does turn over much less. So I think that can, I think in some ways it could be even more useful in over-the-counter markets than it is in equities, which have been maybe can be seen, or maybe will be seen in some years as the the early use case to make sure this all works before applying it to more complex problems like fixed income.
Does in a way go back to Adam's quote before of data without liquidity is useless.
Yeah.
Right. So there is some of that in there. Let me throw another question at you, which is, this one's interesting. Are the legal risks associated with the use of alternative data sets preventing hedge funds and asset managers from embracing them to the fullest extent?
Yeah. Yeah. I mean, I don't know. Maybe Bob, you'll have some insight into this, because I'm sure there's some rules around the data you collect as a firm and what you do with it. But it's is the unknown hurting its adoption?
From the point of view of a data provider or data source, there are things that, as you noted, that that we're limited to disclose based on the way we collect the data. That we're fully aware that if we were able to disclose it and make that more transparent, it would become more valuable to the funds. And there's a number of times where we have to find ways to aggregate, disguise, and otherwise obfuscate the ability of some of the funds not only to see the details, but to be able to reverse engineer it. So we've got to make sure that they can't reasonably reverse engineer the data because of the agreements we have to collecting it. So yeah, that certainly inhibits us as well as many other data providers. There are ethical issues, there are legal agreement issues, all that fall into place when you're looking at alternative data. I think that's at the core of it. It's alternative for a reason, because sometimes we don't really know what we're able to reasonably disclose. And you said it before, Kevin, what's your oven disclosing about the way you live your life, and how much of that is worth sharing with the marketplace? We don't know that yet. That's still evolving.
Yeah, no, an interesting concept. If you go back to sort of the some early sources of alpha were around the primary networks, right? And we saw what happened there, and the impact of RegFD, and how and when does something like that come into the all data space? Time will tell, but it's certainly a space to watch. And so this is Dan again, and we have a few more questions, but I do realize we've taken more time than we actually asked for from everybody on the line. So I think we're going to cut it here. We'll get back to those folks individually, and certainly if we have not addressed a particular question, feel free to reach out to us. Would love to make that connection. Let me thank Kevin, Paul, Adam, Bob, and everybody on the line for the participation. The fact that we did go over it certainly talks to the interesting nature of the subject. It continues to evolve, and it'll continue to be on our radar, and happy to share that with you as we progress. If there's anything further that we can do, once again, please get back to you. You got our contact details. Absent of that, thanks again for your time, and we'll be back again later. Thanks, everybody. Appreciate it.
Thank you.
Thank you.
Bye.